All right, left, right, out here. What a wonderful day. I mean, after yesterday, what I tell you, that was that pump up. It was a flush up. Like for some reason, the markets were looking at the axing of the 3/4 a point rate hike or the 75 basis point, however you want to, whatever terminology you want to use, as that getting axed off the table as some kind of relief that the inflation is going to keep going on and on and on, and that somehow they're going to be more accommodative, and that's going to be favorable for the markets. And I said, well, maybe because sometimes the stock, historically the stock market is kind of an inflation hedge because if you buy certain companies that return capital, and you can stave off some of the inflationary pressures in other regards of the economy. The problem is, that, a lot of the market is highly leveraged, and like I was reporting before that there's a number of zombie companies that are in existence out there. So, I mean, I guess you caught me a little bit doubting myself, even though I told you I was still short. I still am, and I increased my short position yesterday into that rally, and it paid off today. I mean, today was a great day for that. But here's the deal: it's like I think the realization it came into that was, you know, that was all BS. Regardless, we are so far so far evaluated, or so far above any balance in the market that even small interest rate hikes poke the bubble that's in the stock market. And it doesn't matter if you're still in negative rate territory, which you are, which that's going to affect these resource based things, the things that we consume. We're feeling that inflationary pressure, and that's gonna continue. This is stagflation, people. This is it. This is it. I mean, we're living it now. Granted, people are out there. I was listening to like Sean Hannity types, and they're like, "Oh, I said there was going to be a correction, or is it what? It's 1,200 point drop in the Dow, 100 and something point in the S&P. Basically, it's nothing. It is nothing because yesterday it was up almost the same. We're talking about almost 1,000 points in the Dow. So theoretically, because that's an erroneous day yesterday, you're down 300 points and a few points in the S&P. It's not a big deal, people. Not yet. Not yet. Now we need that correction. So I'm not saying this is a correction, but it's interesting, the movement today. It was very interesting, and I'm thinking I'm still playing the flush down. That's why I didn't close out any positions today. I held tight because my initial reaction, if we didn't have that move yesterday up and we had this similar move with the stagnant market after the Fed meeting, I might have closed out some and taken profits, but I didn't. I didn't because this is, to me, it's like, oh, this is a kind of a slight move. In fact, I was looking at the VIX, and the movement in the VIX, yeah, while in relation to yesterday, the collapse in the VIX is great. The overall trend is not indicative of me seeing that's going to be a top, or might be a short term couple day top, but it's not something I want to get out of. That same thing with my S&P shorts. It's like, okay, now I'm slightly above where I was just the other day. So it's not that big a deal. So I think they're overplaying this market drop. It's more of people realize that, hey, what Powell is saying is kind of BS, and that really what that is seeding that they're not able to even one fight inflation. They're not even in the same ballpark. They're not playing the same game as what inflation's doing, and they are pretty much banking on the fact that inflation is going to eat away at the average person's income, and that you're going to have a contraction in consumerism. In a sense, you're going to have to spend more of your income in certain products, and that's why you see on the other side of things today with that market correction, you also seen commodity price still going up. And I'm not, I won't even mention really gold and silver. They were kind of stagnant. But that's what I was telling you yesterday. Is like, hey, gold and silver are not investments in a sense that you're trying to get some kind of return off that. They're long-term stores of value. And so when things like this happen, when the market goes severely down or up, gold is a lot of time, especially nowadays, is going to go up less than the market and down less than the market. All right, that's just that in general, that's the way it is now. But you look at oil. Oil is pretty much flat. It was something that has to do with OPEC and whatnot, but still it's flat in a market that's usually this down. Usually there's a little bit of a correlation in the market, especially on the easy money side of things, between oil and the market when they go up. So oil's up, market's down, and a lot of productivity is also down. That's a report like to historic levels, like 75 years or something. It's incredible, but also but oil's up, and people's discretionary income is severely down. But I've been talking about it because I remember I'm mentioning the housing market on this because here let's go to the bond market. The bond market, solidly one of the greatest, or not great, great as in magnitude moves I think I've seen in my lifetime, possibly. I mean, I can't think of another one. There might be, so I mean, maybe correct me. But we're talking about. Let me just pull it up where we ended up. We're at 302. Okay, well that's 11 basis points. All right, that's not that bad. But it was up to 15. It was 15 basis points. It was at 3.7, and you're talking about like a move, and that's incredible, because yesterday at one time it was like 2.8. Like, this is an incredible move. And we're starting to see these giant moves in the Treasury market, in the 10-year. And that's going to affect the mortgage market, but it's also going to affect the ability for the U.S. government to borrow, right? And I've seen some reports from the Treasury that they're cutting some of the borrowing out of it's tax season, so they're saying they're flush with tax revenue, but we're going to see anyway. So it looks like I said 1,200 points. Looks like the Dow closed at 1,063, which you take yesterday and today, pretty much erroneous numbers are there. If you're a statistical analyst or whatever, you're going to take that number out, and you're going to take, because pretty much you even out. So I'm saying this isn't a crash. We haven't seen anything yet. It could be the beginning. Now, don't get me wrong. That's why I'm still short. But you got to look at all the data points that we're going into. Okay, well, we haven't even started QT. And why haven't we started QT if we're in this inflationary death, kamikaze mission here? If it's so bad and the Fed knows it's bad, why haven't they haven't even started QT? They haven't even got it out at completely. I mean, they haven't sold into the market, whether they're mortgage-backed securities or what. This starts on June 1st. I thought it was supposed to start this month. That was the other thing I totally forgot yesterday. But here we go again. They got a half. They did the half point. Well, if we need to get up to 2.5%, or we need to break this, why are we only going up a half percent? Why don't we break this inflation now before it starts death spiraling up, especially in commodities, the stuff that really matters? When we start seeing the inflation there, that's when you really start seeing, you're going to see even more of a bifurcation in society. You're going to have a huge amount of poverty-stricken people. Like I said, you've already seen it in the demand, and the food bank demand, and that's going to go skyrocketing. I mean, but then you talk about the supply constraints in that. So I mean, there's a lot of precarious things that are going on, but it's very interesting. Oh, there is a report that apparently, the whole strategic oil reserve deal that Biden was doing, apparently they're in the market buying now at, $100-something a barrel, where Trump had filled that thing up at, God knows, I think it was $40-50 a barrel or something like that. So winning again, once again. I'm calling the cracking of the housing market, because you got mortgage rates at a 5 and something percent. You have deteriorating pricing in a number of larger markets, and that's going to feed into these other markets as well. Oh, my lighting's a little bad in here, but oh well, it's always bad. I got a bad camera. But now you have some weakness. It looks like we got some weakness in the labor market a little bit too. But apparently we got 2 jobs open for every person. But back to the housing market. But not only that, so we're seeing that price action in those markets, and it's going to start bleeding into these other smaller markets and some of these other really hot markets that are happening in the West. But we're seeing that, and the Fed hasn't even really. We're only seeing the interest rate side of things right now. There's going to be even more upward pressure on mortgage rates when the Fed comes into the market with the MBSs that they're going to sell. Supposedly it's like 17 billion or whatever this first month. But they're going to be selling those securities back into the market. That puts upward pressure on interest rates. And then also when they raise another half a point, which who knows, they might have some excuse to only raise it a quarter or to maintain flat because of deteriorating conditions. Who knows what will happen between now and June? But they've already set into motion this QT, so we're going to see the first bit of it in June. But like I said, in order to actually let's feel the pain now. If it's good, then why not now with inflation raging? I keep bouncing around on points, but on this point it needs to be made. Are we supposed to just suffer until then? If this is so bad right now, which it is, it's horrid. Why aren't we acting now? Why are we waiting a whole nother month to even start really acting? We need to feel the pain now. The longer you hold this off, like we've been saying for years, the people on my side calling for this stuff, the longer you hold these things off, even though it feels good, the worse the pain is when you actually have a real correction. We don't live in a free market system. If we did, this stuff wouldn't happen. We have a central bank that, controls the interest rates, controls the money supply, and dictates. And then you have a government that also is involved in about every business aspect you can possibly imagine. But on the monetary side of things, every transaction has to do with dollars. You're dealing with a socialistic system. So, this are inherent. The central planners are never going to pick the tops. They're never going to find the balance in the market. So there's always, which, I hate that. And I wish it wasn't, because in a free market, we can all kind of find our way and build wealth and get an actual return on our money. But in a sense too, we got to play the game, right? And I've fought the game for a while, and then now I'm just like, hey, well, if they're gonna do this, well, let's, like I said, don't fight the Fed. I told you I fought the Fed thing out of principle, and then it backfires. So now you're just like, okay, well, these megalomaniacs are gonna do this. Well, how do you make money off of that? How do you help yourself? And if they're doing QT, if they're getting it, that selling MBS, then you got to get short. You have to get out of the market. You have to prepare for that. And when they make that U-turn, which they will, once the stock market craters in a sense, or has a severe recessionary correction, they'll be back, and then you got to play it on the other side. But for now, you got, like I've been saying for the last few months, you had to prepare, hedge yourself for the downside. And I don't know if we're quite there yet, but we are on the precipice. I've been waiting for this moment. I've been waiting for the Fed to actually act and collapse this thing. Like I said, I don't think they'll get over a 1.25 point without severely disrupting the stock market itself. And then we'll be looking out for them to come back in, and whatever various capacity that they think they can do. Now, will that help? I think that's when you have the currency collapse. But I guess, all I can say is there's been a lot of people that have been on the face of this, have been on board, been waiting for this moment, and can't believe how long these things, these irrational moves can last. But we've also been, on the there's a lot of people, especially even conservatives, that somehow believe that it's been such a great economy over the last so many years, which has all been a facade. It's all been mostly fake. There's a lot of companies that shouldn't exist that do exist because of cheap, manipulated interest rates and cheap money. And that's coming to an end. So, I can't blame Biden completely on this. I can blame him on certain things, and definitely not reacting to these deals. I can blame the central bank mainly. But I also blame, conservatives around. I'll blame them too, but I'll also blame them for not educating themselves economically. Of course, they understand certain supply and demand dynamics. So I'd rather have a conservative in office, because at least they're going to try to oversupply the market, and it kind of offsets a little bit of the rising prices if you can supply. But you can only go so far. That's why you have to have the money supply that's either a free market, or the Fed has to act, which they'll never get it right like a free market. They have to act like they should have contracted the monetary supply when we have a contraction in supply in order to stabilize prices. But they didn't, and they haven't. They're always trying to pump bubbles because they believe in, that the wealth effect is an effective means of lifting people out of poverty. Let's see what else is going on today. The market's just been, I've been fascinated with it. I was watching that thing go, and the U.S. productivity, which I mentioned earlier. U.S. productivity crashes the most since 1947 as labor costs explode. Labor costs are exploding, but that's the least of the worries, because actually the cost of goods is what, I guess labor can be wrapped in, but the cost of physical resources and whatnot, that's exploding. The cost of getting those resources on location in order to conduct whatever productive activity you are doing, to put those goods and services together, that's exploding. Diesel prices, like we keep saying, diesel prices exploding. OPEC have come out. They're not they don't give a crap. They're not listening to Biden. They're not going to produce anymore. They're happy with things right now. And who's winning and who's not winning. Well, it seems like Russia's winning because Biden's, the ruble's collapsing. Well, that it completely reversed. If you look at the ruble now, it's stronger than it was when he made that statement. I mean, it's significantly stronger. I think it's at all multi-year highs against the dollar, even if the dollar was going up today. But it's amazing. And if you talk to people that are living in Russia now, there's I think I mentioned this before. There's some goods that they get that they've seen an impact from the sanctions, a few items, but the bare essentials, whether it be fuel, housing, and certain most food items, they're actually significantly better off than we have over these sanctions that've been imposed. So I'm wondering, it feels like we're ones feeling the brunt of them of the sanctions rather than the Russians themselves. So I have no idea. I think this whole administration they are completely lost in the woods, beyond. It's almost to the point where you kind of give in to the conspiracy theories and they have to know this and they have to be doing this on purpose. I mean, because it's so out there. But I know I always bounce around. It's because I get in these rabbit holes. My mind works that way. I want to jump from topic to topic because I get onto something and this means this. We need to go over here. We need to go over there. Before I leave, because we're at 16 minutes right now, I want to get through this. Probably make these longer so I can actually get into one topic. But Turkey, I've talked about them in the past, canary in the coal mine. Their inflationary rate, apparently, how they measure it, and their CPI, it's 70% year over year. I don't know why he doesn't go to a gold standard, Erdogan, and copy what Russia's kind of doing and make their currency, kind of commodity based, their lira. Anyway, it turns out, on the Russia-Ukraine front, we've kind of admitted that our intelligence service is feeding information in the Ukrainians, and they're utilizing it to target high-level generals. That's also precarious because who's to say now you're opening the door for other people to target our own upper brass instead of there's certain conduct of war policies, and we go over it in the military as well. When we get into this where we're targeting high level leaderships or diplomats or even political leaders, which it's kind of a fine line where you're talking about a general, then we're getting into a point of kind of a slippery slope. I don't necessarily think that if they happen to kill a guy that happens to be on in the battle space or in the area in the AO at the time, then it happens. But if they're specifically targeting these guys, then we're starting to get into that which the CIA has been known to target political figures. It's nothing new, but at the same time, does it open the door for the Russians to do the same? Which I've told anybody that listens, the 50, 100 people that actually do. Hey, if you look back, I don't know. I was in enlisted at the time. The Russians, apparently a report came out. Russians apparently have hit teams all across the world ready to take out political leaders, and maybe that's how he had the poisonings, like in the UK of that I think he's an oligarch, and certain various poisonings around the world that could possibly be. But apparently these teams are around the world, just waiting to call. Is it true? Is it hyperbolic? I think there's some kernel of truth definitely. At the time we were wondering, but then also just looking at the capabilities of their KGB, which is notoriously seems to be a fairly good intelligence service, or what they could possibly do if it came down to it. But I don't know, man. I don't know. But like I said, my call is by the end of the month that there will be some kind of pretty much culmination of the war, and they're going to take that eastern part, like I've been saying. It's going to create that land bridge to Crimea. They're going to allow those two republics to exist. One of them right now, and I think both of them will inherently draft resolutions to mold themselves into the Russian Federation, and then there you go. And then it's up to the peace negotiations to commence and just strike a deal. But I don't think, as long as Zelensky is in power, I don't think that's going to happen. There's going to be small skirmishes, but really no land gaining unless there's some really outlandish action that causes Putin to, or gives Putin the green light to go further. I know they're calling for there's been talk about Moldova, but I don't know. We'll see. It's pretty precarious. You can't trust anything you hear on that regard anyway. But anyway, 20 minutes, so I got to go. Peace.